Hi, everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, let's start with the big story this week. NVIDIA's results were strong on paper, yet markets sold off. What happened?
This is the classic good isn't good enough moment. NVIDIA reported another record quarter, revenues up over 50% year on year. But here's the catch. Its data center business, the heart of the AI story, came in a touch lighter than the euphoric expectations. That was enough to send the stock down over 3% after hours. The impact didn't stop there. Asian tech names like TSMC and Samsung got dragged lower too. But paradoxically, in China we saw the opposite. Chip makers like SMIC and Cambricon actually surged. Investors interpreted NVIDIA's wobble as a sign that US AI dominance might be plateauing, leaving room for domestic Chinese players to catch up, especially with Beijing's stimulus narrative in the background. So we've gone from an AI-fueled frenzy in the West to an interesting bifurcation. Weakness in US megatech, strength in Chinese local heroes.
That's a fascinating rotation. Speaking of China, next week's SCO summit is grabbing headlines. Why does it matter?
The Shanghai Cooperation Organization has traditionally been a bit of a talk shop, but its symbolism is growing as global alignments fracture. China will host more than 20 world leaders in Tianjin, including Putin and Modi. And Modi's attendance is particularly noteworthy. He's going to the SCO but skipping Beijing's Victory Day parade right after. That signals India's intent. Stay engaged multilaterally, but avoid endorsing China's military theatrics. The SCO has become a kind of halfway house. Countries like India, China, Russia, Iran, and the Central Asian republics can coordinate on energy, security, and trade without formally binding themselves into a bloc. It's a way to project an alternative to Western-dominated forms. And markets are watching because it speaks to how the geopolitical chessboard is being reset.
Let's pivot back to the US economy. We got an upside surprise on Q2 GDP, 3.3%. Should we be impressed?
On the surface, yes, it's a sharp rebound from Q1's contraction. But peel back the layers and the story looks less impressive. A big part of the GDP boost came from a steep drop in imports, which mechanically inflates growth. If you look at real final sales to domestic purchasers, basically what Americans actually bought, it was up just 1.9%. That's decent, but not spectacular. So the headline says, booming economy, but the underlying demand picture is much more tempered. It's a reminder that GDP can flatter to deceive.
And how's the Fed reading all this?
This is where it gets interesting. Fed Governor Christopher Waller came out this week calling for a September rate cut of 25 basis points. That's a notable shift. He cited softer labor conditions and fading inflation and suggested a gradual path toward a neutral rate closer to 3%. That's dovish compared to recent hawkish rhetoric. But Waller did add a caveat. He's still waiting for next week's jobs data and the following week's inflation print. So the September cut isn't a done deal, but the door's wide open. And markets are leaning dovish, pricing and easing sooner rather than later.
Before we wrap, we're almost at the end of August. How are markets shaping up month to date?
It's been a mixed bag, but broadly constructive. In equities, the MSCI World is up about 3% this month, MSCI USA plus 2.6%, and Japan really stood out at plus 7.4%. China rallied nearly 4.5%, helped by policy hopes. India, though, was the outlier, down over 2% this month and still negative year to date. In bonds, pretty quiet, global aggregate barely moved, but high yield added around 4.5% this month. In commodities, gold remains resilient, up nearly 20% over 12 months and plus 119% year to date. Oil slipped a bit. Meanwhile, the dollar was flat this month, but remains down almost 8% year to date. Bitcoin has cooled, down slightly this month, after a huge rally earlier in the year. So, the theme is rotation. US tech cooling. Japan and China strong, India under pressure, and gold still quietly doing its job as a hedge.
That's it for this week. Stay tuned for more insights next time.